presidential election, and will affect the markets, and then the markets will also affect the amount of money that we're spending on wars will have an effect, and they are all coming together. I think that 24 will be a pivotal.
Trump says he'd be better for the economy than Biden. Voters' polls may agree. But would he be able to tackle inflation and other economic commotion? Ray Dalio didn't think that way. Both Biden and Trump aren't fit for the position in this coming election, as both will only jeopardize the economy more. Is he right with this claim? Dalio sounded the alarm on the perilous state of American politics, admitting he's dreading a rerun of the fractious 2020 Trump-Biden election, which scarred the country. This is what he said.
If President Biden wins a second term, good for the market, bad for the market. If former President Trump wins a second term, good for the market, bad for the market.
I think they're both threatening for the markets.
Both are threatening for the markets.
During one of his speeches, he even called the 2024 election the most important part of our lifetime. Dalio said he was praying we don't have another Trump-Biden election because it will produce many problems. Dalio founded Bridgewater Associates, the world's largest hedge fund with roughly $100 billion of assets, and was an official mentor to its co-chief investors. He warned that markets are pricing in a Goldilocks economy this year with moderate growth, dissipating inflation, and tumbling interest rates. According to Dalio, investors are too optimistic about the economy and are not worried enough about global threats. He continued on his LinkedIn post that assets are trading roughly in line with fundamentals, with U.S. stocks and bonds perhaps a bit expensive, and there's no sign of a 2008-style financial crisis. However, internal and external conflicts and climate change add risks for markets and economies in 2024. In contrast, Dalio expects growth to disappoint as pandemic savings dwindle and debt costs rise. Inflation remains about 1 percentage point above central banks' targets, and rates fall more slowly than predicted. But he hasn't placed any strong bets on those outcomes, given the uncertainty of what lies ahead. Separately, the author of Principles for Dealing with the Changing World Order warned of potential trouble for investors whether Joe Biden or Donald Trump wins the U.S. presidential election this year. According to him, both candidates are threatening markets, and a victory for either could ignite political tension in America. Ray reminded us about the deeply divisive contest for the White House, which resulted in a Biden win, eventually leading to an insurrection in 2021, where Trump engaged in a multi-part conspiracy to overturn the lawful election results and failed to act to stop Republican supporters from attacking the Capitol. He just made mention of it briefly this way.
Where even politics is made as a political weapon, so that we're now having fight.
Not only internally, Dalio believes it'll affect external issues with other countries, be it the U.S. and China power struggle, the Russia and Ukraine war, or the Israel and Gaza war. The risks are too high. Irreconcilable differences. Dalio believed we have irreconcilable differences between sides that will not accept losing. He pointed to the festering extremism that threatened to tear the fabric of the nation apart in 2021, while also framing the polarization issue as a far left versus a far right in America, with a shrinking middle or moderate political center. The outspoken investor minced no words, asserting there would be no good government or society with that kind of fighting. He expressed deep concern over the dire implications of such political skirmishes, emphasizing their potential economic and tax ramifications. Let's hear him again.
No good government, no good society exists with this kind of fighting, and this is not good governance. This has big implications. It has big economic and tax implications.
The big question is whether an alternative candidate will emerge on the Republican side. State of the Union, election. In recent years, U.S. presidential elections have been rocked by economic disaster, stunning gaffes, secret videos, and a pandemic. But for all the confusion that defined those campaigns, the volatility surrounding this year's presidential contest has few modern parallels. posing profound challenges to the future of American democracy. Not since the Supreme Court effectively decided the 2000 campaign in favor of Republican George W. Bush has the judiciary been so intertwined with presidential politics. In the coming weeks, the High Court is expected to weigh whether states can ban former President Donald Trump from the ballot for his role in leading the January 6, 2021, insurrection at the U.S. Capitol. Meanwhile, a federal appeals court is weighing Trump's argument that he's immune from prosecution. The maneuvers are unfolding as prosecutors from New York to Washington and Atlanta move forward with 91 indictments across 4 criminal cases involving everything from Trump's part in the insurrection to his efforts to overturn the 2020 election and his hush money paid to a porn actress. Depending on how Trump's appeals play out, he could be due in court as early as March 4, the day before Super Tuesday. This raises the unprecedented prospect that he could close in on the GOP nomination from a courtroom. On the Democratic side, President Joe Biden is seeking re-election as the high inflation that defined much of his first term appears to be easing. But that has done little to satisfy restless voters or ease widespread concerns in both parties that, at 81, he's simply too old for the job. And at least 3 serious candidates who have launched outsider presidential bids threaten to scramble the campaign and eat into the support of independent voters who were critical to Biden's success in 2020. Facing such uncertainty, few expect the traditional rules of politics to apply in 2024. Jim Messina, who managed former President Obama's re-election, believes the election will be very close. This is what he has to say.
Donald Trump is an existential threat. I personally believe you have to do more than that. I think you have to make your own case, and it can't just be a referendum on Trump. Hillary tried that, and it didn't work. Biden in 2020 had a better campaign where he talked what he's going to do.
Nevertheless, expectations for politically fueled moves in asset prices around the 2024 vote are high among some strategists, with Goldman Sachs saying the election could be a major market event. Samir Samana, senior global market strategist at the Wells Fargo Investment Institute, said a second term for either Biden or Trump could heighten focus on issues they have already emphasized in their first term, such as tax cuts for Trump and environmental spending for Biden. None of them has changed all that much concerning their philosophy and what their goals are. After a wild 2-year ride, the S&P 500 stands at a record high on expectations that the Fed will cut interest rates later this year while the economy remains resilient. Bets on Fed easing have also brought down Treasury yields, which move inversely to prices from last year's 16-year highs. Despite all these, Harry Dent envisions a starkly different scenario for 2024. During an interview with Fox News Digital, the economist claims 2024 will be the biggest single crash year we'll experience. Let's tune in to Fox News a little.
Meanwhile, economist Harry Dent is making a dire prediction about the market next year. He says 2024 is going to bring, and I'm quoting him now, the biggest crash of our lifetime.
Although the stock market is bound to fluctuate, Dent is aware of that and has made a prediction that goes beyond the typical market correction. He even wanted you to stop listening to your financial advisor if he told you otherwise, because he believes things will not return to normal in a few years. We may never see this level again, and it will be more in the 29 to 32 level. Dent was bold enough to say that anybody who sat through this level would have shot their stockbroker. That will be an 86% crash in the S&P and a 92% in the NASDAQ. And crypto, it's going to be 96%. This is what he said in this clip.
This time, it's got to crash 86%, the S&P 500, just to get back to the last low in early 2009.
Given the extensive exposure many people have to the stock market through their retirement savings, a severe downturn in the S&P 500 could be devastating. What would you do in this kind of situation? Let me know in the comments below. Seeking safety in a storm. If you believe the markets are headed for a crash of historic proportions, you probably wouldn't want to stay invested through that downturn. Given these alarming forecasts, investors are likely seeking a haven. In an interview with Think Advisor, Dent shared his perspective on the safest investment. According to The Economist, gold won't be the real money but treasury bonds. But before you sell your entire stock portfolio and load up on treasury bonds, remember that Wall Street doesn't appear to share much of Dent's concern. For instance, Goldman Sachs recently raised its 2024 price target for the S&P 500. Considering that the benchmark index currently sits at 4,770, it might increase till 5,100. The price target implies a potential upside of 7%. One reason behind Goldman's bullish stance is interest rates. The investment bank now expects the Fed to cut rates 5 times in 2024. But with the election tussle that may result from the potential candidates, room may be given to a stock crash. Focus on taxes. Lower taxes could broadly boost equity markets if Trump wins and succeeds in making his 2017 cuts permanent. Though fears of a revived trade battle with China might counterbalance some of those gains. Trump has proposed to increase tariffs by 10% across the board to bolster U.S. manufacturing. This was him making the statement.
We're going to be instituting tariffs. Next week we'll be signing. Perhaps some of you folks will be here. When you have Nucor, when you have U.S. Steel, you have the great aluminum.
The firm wrote that tax cuts could also stir fears of growing budget deficits and weigh on treasury prices by pushing up term premiums, a measure of the compensation investors demand for holding long-term bonds. Rating agency Fitch downgraded the U.S. government's top credit rating last summer, citing factors including expected fiscal deterioration in coming years. A Biden win might mean higher corporate taxes and a possible stock negative. The degree to which either candidate can push through his respective policies depends on which party gains control of the House and Senate. Chief strategist at Baker Avenue Wealth Management, King Lip, also revealed that shares of solar stocks and other renewable energy companies, many of which have been pressured by higher interest rates, stand to benefit from the re-election of Biden due to his expected support of clean energy initiatives. While Lip continued that the clean energy industry can do well under Biden's second term, analysts at Neuberger Berman said a Republican sweep could trigger a significant relief rally for large-cap pharmaceutical companies that would be less likely to see drug price controls implemented as part of the Inflation Reduction Act. Neuberger Berman Chief Investment Officer Joseph Amato wrote that as a domestically focused sector, healthcare service could be a shelter from the trade policies of the Trump administration. Goldman Sachs strategists wrote that a Trump presidency could boost the U.S. dollar in foreign exchange markets. Their analysis, which studied a period of dollar strength following Trump's victory in the Iowa caucus on January 15, suggests that Trump's trade and international agenda might ultimately be worth a further 5 to 10% upside to the USD in the event of a Trump presidency. They, however, warned that markets may be slow to price in any possible outcomes this far from Election Day. Biden versus Trump. The U.S. economy is rock solid by many measures. An employment report shows employers added 199,000 jobs in November 2023, and the unemployment rate dropped to 3.7%. Inflation has also plummeted in little over a year from a troubling 9.1% to 3.2% without causing a recession, a phenomenon that somewhat skeptical economists have dubbed immaculate. That was Bidenomics, yet people remain discouraged about the economy, according to the University of Michigan's Index of Consumer Sentiment. The December 2023 figures show the sentiment increase as people seem to recognize that inflation is cooling, but the index is still slightly below its July level. In a possible warning sign for Biden, people surveyed for the index brought up the 2024 election. Sentiment rose dramatically more among Republicans than Democrats, potentially suggesting that GOP voters became more optimistic about winning back the White House. As for Dalio, he prefers Nikki Haley to any other candidate and hopes she gets the nomination from Republicans. According to Dalio, Nikki is smart, can work across party lines, has the quality of character, and has been through the system. She has been the governor of South Carolina and the former U.S. ambassador to the United Nations. Dalio even said Haley would likely win the election if she became the Republican candidate. He added that if Haley gets the nomination, the Democrats would have to reconsider running Biden against her.
The question is whether Biden runs a combination of his age issue, his popularity, and so on are a problem. So that if Nikki Haley should get the election, get the nomination, she would be the probable winner in a presidential election.
Some investors are already gaming out how the U.S. 2024 presidential election could impact markets, as former President Donald Trump's victory in the New Hampshire Republican primary brings him closer to a rematch with Democratic President Joe Biden. Any calculation of how stocks, bonds, and currencies could react to the November vote results comes with caveats, especially since it's early in the year and betting markets are split on which candidate will prevail. Most investors also believe drivers such as Federal Reserve policy, the economic cycle, and corporate earnings will ultimately matter more for markets over the long term. Who wants the rematch? Most public responses are negative when asked if President Joe Biden or former President Donald Trump should run again for president. 70% say President Biden should not run for a second term, with just 26% supporting a run.
As President Biden prepares to launch his re-election bid, our new NBC News poll shows 70% of Americans say the president should not seek another term, including 51% of Democrats.
As for Trump, the survey found 60% of the public think he should not seek the presidency, compared with 35% who believe he should.
6 in 10 Americans, including a third of Republicans, say former President Donald Trump should not run again either.
Substantial numbers in each politician's party prefer their names not to be on the ballot, including 37% of Republicans who don't want Trump to run, 61% of independents, and 88% of Democrats. For Biden, 57% of Democrats say he shouldn't stand for office in 2024, with 66% of independents and 86% of Republicans. CNBC's Democratic and Republican pollsters believe Democrats will likely support Biden if he's the nominee, and Republicans will support Trump. In a primary, each candidate would have a substantial level of support that could allow them to gain their party's nod, especially against a large field of competitors who would split the vote. Still, both pollsters pointed to the large opposition from within each party and said neither Trump nor Biden is starting in a strong place. While Trump has announced he's running, President Biden has not officially done so. The survey found that 47% of those who think Biden should not say age is a major reason, including 51% of Democrats who don't want him on the ballot and 66% of seniors. By contrast, just 43% of the 18 to 49 demographic groups cite age as a major reason. Biden is now 81 years old. Just 8% say age is a major reason they don't back another run for Trump, who is 76. Within their parties, both candidates are relatively popular. About 3/4 of Democrats and Democratic-leaning independents would be satisfied with Biden as their party's nominee, and 3/4 of Republicans and Republican-leaning independents say the same of Trump. However, the poll shows Trump's voters have more enthusiasm. 43% of Republicans and Republican-leaning independents would be very satisfied with him as their nominee. That is compared with 30% of Democrats and Democratic-leaning independents who would be very satisfied to have Biden at the top of the ticket. And that leaves both candidates with 1 in 4 of their party's voters unsatisfied. Perhaps because of such apathy, some voters don't believe Biden and Trump will end up on the general election ballot, despite strong evidence. Conservative strategist Sarah Longwell, who founded the Republican Accountability Project, says she hears this idea regularly during weekly focus groups with voters across the political spectrum. According to Longwell, voters didn't think about what's coming right in the country, with the most likely scenario being Trump versus Biden. To her, Trump is the most dangerous. Does that mean Biden can successfully undertake the task again, or may what Dalio clamored about occur? Let me know your opinion in the comment section below. If you found this video insightful, please like and subscribe. See you in the next one.